Hello, everyone. Good evening. I am on the 1st of May 2020. It's a market holiday. It's a Friday, late afternoon here. And I thought that I'll quickly make up a video on the monthly analysis of the Indian equity markets and the various sectors also. Before that, I'll walk you through the long-term monthly charts, the long-term supports, where can the index further fall down to levels for the Nifty and the Bank Nifty. Now, this is in front of you, the monthly chart of Nifty. This video will focus predominantly only on the monthly charts. So a couple of things I want to bring your attention to is I'm looking at the lows of 2008, the lows of 2011, 2013, and 2016. So these are the 1, 2, or if you allow me, I can quickly use this tool here. 1, 2, 3, 4. These are the 4 low points and the 4 swings which I'm considering. And accordingly, I've drawn few Fibonacci retracement levels and trying to figure out which way the market can find some support if it falls further down. Now, on this chart, we can clearly see that it has found support from the 61.8 retracement level of the second swing, this one. So it seems as of now that the index is retracing the swings from the low of 2013 as of now, because we've got a decent bounce back. Now, if it breaks the current lows, which is 7,500, then the next level to watch would be close to that 6,800 mark, where we are looking at 100% retracement of the swing from 2016. So the 2016 to early 2020 swing will be all 100% gone if the current lows are breached. Now, this is a repetitive of what I've been saying, that sub 8K and sub 7K are the 2 main supports from where the index can bounce back, and I continue to hold on to it. Everyone gets proven right and wrong at times in the market, and if I get proven wrong, then I've got an excellent cluster, and I would say the highs, the cluster of Fibonacci retracements, confluences in this zone, which is 6,150, 6,210, 6,390. So we're looking at 6,100, 150 to 6,400. Will this come? I don't think so. I feel that the worst case scenario would be sub 7K, close to 6,800. You never know. So these are the long-term levels for the Nifty. Important thing is, if I bring your focus to this rising channel, I'll get rid of these drawings. Yes. So I would like to bring your attention to this rising channel. If you notice this rising channel, this red line, yes, the first sign of weakness will come if the index drops down and breaks below this rising channel on a closing basis, not on an intra-month basis. Remember, this is a monthly chart. On a closing basis, if we have a breach of this line, then the possibility of the lows opens up. We'll see how it plays out in the months ahead. Bank Nifty is a far cleaner monthly chart for me. This is the monthly chart of Bank Nifty, and this is the similar 4 lows down here from 2008, 2012, 2013, and then 2016. The beauty of the Bank Nifty chart is the Fibonacci retracements are confluencing really well, and they're proving themselves also pretty well. So as you can see very clearly on my monthly chart, I have a beautiful confluence over here from multiple swings, and then the next zone of confluence comes down here. So interestingly, if I tell you the levels, this confluence comes more or less in the zone of 17,300 to 17,900. And on a closing basis, of course, the index is holding really well, and it has given us a bounce back. Interestingly, the next confluence for the Bank Nifty, which is 13,000 to 14,400, 14,500, Now, this confluence, you have to pay a little bit of attention here. If we find the Bank Nifty down here over the few months, then this level of the Bank Nifty corroborates with the 6,100, 6,300 levels of the Nifty. All right. So it will be interesting to see how the index plays out. But as of now, the index is holding really well. I'm talking about the Bank Nifty holding really well in this conference level. And the 2016 lows, for me, the sub 7K is the worst case scenario for the Nifty. And that will corroborate for the Bank Nifty at 13,400, 13,500. So these are the levels we should keep in mind for the Bank Nifty. And again, in this case also, we've got a beautiful, the red channel that I've drawn. If you focus on this red channel, a monthly close below this red channel will confirm that further weakness is down on the cards. I have run few monthly performances. I've taken 1 month, 4 months, and last 12 months. That's rolling yearly performance. Why have I taken 1 month? Of course, the month of April has finished, and we would like to see which sectors have performed vis-a-vis the index. The 4 months I've taken purposely because if you look at the monthly charts, you would clearly see that I have taken from the close of December. So one, that is Jan, Feb, March, and April. See the carnage, the damage started from the month of Jan. So I've considered 4 months, and we can run a report designer on the various indices, which is NSE indices, and this is the performance. I have taken it, exported to an Excel sheet, and I'll show it to you here. It's on my second screen. I'll drag it here. Yes. So if you pay attention here, we've got the sector, we've got 1 month, 4 month, and a rolling 12 months, yearly rolling performance of the various sectors. This first table I have sorted in terms of the first month's performance, the first month. And you can see that the pharmaceutical down to auto, energy, all the way down to PSU bank, they're all closed positive for the month of April. Of course, April has been a big bounce back. So starting from close to 30% gain from the pharma to all the way down to like flat PSU banks, they've all gained. Now, where do your benchmark Nifty, Bank Nifty, and your broader markets pile up? I have highlighted Nifty, which is close to 15%. If you go a little up, you can see mid cap, which is 15.3%. If you come a little back, little down, Nifty 500, which is the indication of the broader markets, and then you have the small cap. So if you look at the small cap, if you look at the Nifty 500, if you look at Nifty and the Nifty mid cap, they're more or less in the 13.5 to 15.5. So we're looking at a 14.5% average gain from the broader markets and the benchmark indices. So my next point is then which are the sectors which did better than the broader markets, number one, and which are the sectors which underperform the broader markets. So the first thing I come here and I can see these are the 4, 5 sectors. So what I'll do, I will copy them down to private banks and I'll paste it here. So pharma, auto, energy, metal, and private banks this month, when the April finished, has done better than the benchmark Nifty and the broader indices. That's in terms of 1 month. Now, what have been their performance for over the last 4 months or 12 months? Now, if you sort them in terms of 4 months performance, then you can clearly see pharma stands out. In fact, pharma is the only sector which is very close to gains over a 1 month or over a 1 year period. So pharma definitely is standing out. It's gained 16% for the last 4 months. In fact, if you look at this column on the left hand side, you'll find the only green that stands out is Nifty Pharma, which is 16%. So Pharma definitely is standing out. So what we will do is we'll quickly make it a little bold and bullish. So let's give it a little bluing. Okay. Now comes energy, auto, metal, and private banks. Now, energy is down 17% for the 4-month period, auto 28, metal 33, and private banks also 33. And if you look at their respective yearly performances, this also more or less similar. Energy is the one which is standing out. Metal really beaten down in a yearly performance of close to 40% down. Then you have auto and private banks more or less 30% down on a rolling period of a yearly time frame. I would say we should definitely keep an eye on energy. Now let's open your charts here and let's compare energy and pharma. Okay. So you come to pharma and you look at the monthly charts, you can clearly see that it has been a big time underperformer since I would say 2015. And this is a wake-up call. The sector is turning around. Unlike Fmcg, if I show it to you, it's close to its life high. Pharma is significantly away from its life high, and it's a turnaround story. And we feel that this turnaround story can continue for a further longer period of time. And we feel that this correction from 2015 to 2020 is over now. So our focus would continue to stay on the pharma. We would look to buy on dips. If you allow me to go to lower time frames, I have marked this zone with an exceptional move vertical. If it eases down and comes down a little bit, then one should look to buy on the dips. And there have been exceptional stocks which have hit life highs and have shown great movements on the upside. So pharma definitely stands out. You should keep pharma on your radar. What about energy? Now, to understand energy, what I'm going to do is I'm going to go to the report designer and I'm going to quickly run the same thing. Exchange defined by NSE. I'm going to run the same thing on the energy stocks. I will not export this to an Excel sheet. It will take some time. What I'll do is I'll show it right in front of you, and you would definitely see that Reliance Infra over here is showing up. It does not matter. It does not have much importance, but it's essentially Reliance Industries followed by Gas Authority, ONGC, BPCL, Inpetro, NTPC, etc. Tata Power, Power Grid, underperforming big time. Stay away from them. So it's the heavyweight Reliance which actually led the Nifty Energy to bounce back. You need to understand that we're in a different kind of a bear market where stocks have bounced back in few weeks and gone to life highs like Hindustan Unilever. And one of the heaviest stock, Reliance Industries, is also close to its life high. So should we call it a bear market? I don't know, but in terms of price, in terms of damage, yes, the market has moved into a bear market zone. So taking away from the Nifty energy space, it is essentially Reliance. This is the weekly chart. This is the monthly chart of Reliance. You don't see the kind of damage in this chart at all. Gas Authority, ONGC, BPCL. Now, if BPCL is holding well to its averages, Hinpetro and IOC is underperforming. So between your oil marketing companies, I would say BPCL is definitely one you should keep a watch. It's made this bullish engulfing kind of a pattern on the monthly charts also. So if I want to sum it up, the energy, it is essentially Reliance Industries. Rather than talking about the sector, we can clearly talk about only one stock, Reliance. It has proven itself time and again that this is the stock which supports the market when the times are really bad and helps the market to bounce back. And it has done that this time also. So continue to look at Reliance and look to buy on a day at supports, etc., etc. Look to trade in and out of it. Keep a bullish stance on the stock. And the next one I would say BPCL, and the rest are not doing that great. So that's the two. What about auto, metal, and private banks? What's their call? So let's come here and let's look at Nifty Auto. This is the monthly chart of Nifty Auto. Okay, this is the private bank. We don't have much data from the private bank on the monthly time frame. And then the metal. I'll talk about the metal first. it looks really promising because it's down to its live flows, which are supports. It's kind of bounced back well. And the reason I have two sets of retracements drawn here to find out the resistances is because I feel that this correction for the Nifty metal is over. I feel so, I sense so. And it will take some time and it would try to bounce back further up. This is the weekly and this is the daily charts. But I feel that even if it falls, even if Nifty breaks below the channel, if it comes down to its previous lows, etc., metals will try not to fall the rate at which it has fallen over the last 3 months, the months of Jan, Feb, and March. Look at this fall. I think this is more or less the last nail. And even if it comes down, these lows of 1500 or 1400 would hold, and it would try to show relative outperformance vis-a-vis the Nifty stocks and would try to bottom out. I feel so. Similar call we can take for the auto also. This kind of sheer fall essentially leads to the final leg of the fall and can lead to some degree of bounce back, which we have the bounce back. And I think going forward, we should keep an eye from a long-term perspective that auto and metal can also do relatively better than the index. So we'll keep this stocks in mind. Now, before I go to private bank, we would now like to see which are the sectors which underperform the Nifty. This is where the Nifty stands. And now we will be interested to see financial services down to the PSU banks. So let's take them, and I'll take the whole thing. I'll bring it next to this. Delete. There you go. Now we're talking about the underperformers from a monthly basis. And if we sort them, let's go to data, filter. And if we sort them in terms of gainers for the last 4 months perspective, none of them are gainers. We've got the least damage coming from FMCG, then IT. Now these two are really, really interesting. I would straight away mark them for you, FMCG and Nifty. Now remember, if you look at the rows, the columns of Nifty FMCG, you get a positive gain from the 1 month, negative 4.8% from the 4 month, and negative 5.5% on 12 months. That's not bad actually if you look into where we are. And if you look at the index also, this is where the Nifty FMCG is holding, and it looks like the index has shown strength. The consumption plays like Nestle, Britannia, Dabur, Hindustan Unilever. ITC is the biggest underperformer in this space. It's got some weight attached to it also. But overall, I think FMCG and Pharma will continue to play as the defensive sectors for the market. My call would be to keep a close watch on the Nifty IT. Now, IT has played a role pretty well in the last 1 month for sure. It's up close to 11%. 4 months, it's down close to 9.5, 10%, and a 12-month rolling is around 15%, which is in line with the Nifty. If you look at the Nifty 12-month performance, it's around minus 16%. Okay, so on a yearly performance, if you look at, then IT definitely holds out. IT, FMCG are the ones which are holding up. Let me quickly run a report designer of the 1 month, 4 month, and 12 month on the IT universe for you. I think I have spoken about this at length before also, but Just Dial, Tata Elxsi, HCL Tech, Hexaware, Infosys and Mindtree, and TCS. These are the stocks over the last 1 month which have gained more than 10%. There are 2 stocks which are negative. There are only 2 stocks which have underperformed. Wipro and Tech Mahindra. And Wipro, Tech Mahindra have underperformed. Will not want to get into them, especially Wipro, because it has fallen significantly. It's down close to 33%. Tech Mahindra is 33%. Wipro is 35% over a 1 year period. The turnaround story is if you look at Just Dial, down 30% for the year and it's now up 40% for the month. So it is a volatile counter. would not like to, look over there. It's the ones which is holding exceptionally well. Mindtree down only 6% for the year, up 14% for 4 months. Okay, so the markets are down significantly in the last 4 months. It's up 14% and 10% up for this is consistency. Mindtree. Then you have TCS 10% for the month, minus 5% for 4 months, and minus 4.5% for the year. Then you have NIT Tech and I think Infosys up 11.5% for the month, down only 3% for the year, and down only 2% for 4 months. There's HCL Tech also, which is up 24%, down only 4% for 4 months, and down 8%. And of course, there's Tata Elxsi. So if you look at the IT stocks which make up the Nifty IT, it's not that each and every one of them have shown exceptional strength or exceptional weakness. Just Dial, if it comes at the top of the list, does not make it the most strongest counter. In fact, it is proving itself that I have been the worst stock in the last, one of the worst stocks in the last 1 year, and I'm the best stock in the month, means I'm extremely volatile. Stay away from it. I would say continue to keep a close watch on stocks like Tata Elxsi. It's got a strong support at 620. It's bouncing back from there. HCL Tech has bounced back exceptionally well, trying to go to its life highs, followed by Infosys, Mindtree, and TCS, and NIT Tech also. Mindtree is the one which is showing the exceptional, the most, I would say, the consistency. Because if I sort this in terms of a 4 month, if you allow me to sort this, you'll see Mindtree comes at the top, Infosys second, Tata Elxsi, HCL Tech, TCS, etc. So this is how they have stacked up. So IT, I think, and the second rung IT stocks, all right, alongside the large caps like Infosys also, is likely to outperform the market, even if it continues to, if it comes down and falls, I think IT would do good. Now, let's do the other way around. If you look here, PSU banks and media. Now, these two pockets of the market don't have much weightage. We're looking at a damage of more than 50% for the year. You would find that it's a big sale, it's a big cheaper price that we're getting. But I would strongly suggest not to put your hands there. You should, I would in fact completely delete these two sectors for you, because when the markets have been down and we are in a times which is extremely uncertain, we would like to put our money in quality blue chip stocks and sectors rather than wasting our money and capital parking into the sectors and those stocks just because of the fact that it's down 50% doesn't make much sense. There's not much rationale there. I would take out the small cap, because small cap we are not talking about. We're mainly the objective of this video is sectors. Now I'm left with financial services, and I can easily club it with the bank nifty or the banking and financial services. Now you like it or you don't like it, more than 33% of the index weightage or the market's weightage comes from these two pockets, the banks and the financial services. So if the market goes up, the role of these two sectors will be there. It has to be there either on the upside or on the downside. So we don't have much choice. All that we can say is the private sector banks have done relatively better than the PSU banks. Amongst the PSU banks, I have a very strong belief that one should only look at State Bank of India, nothing else, and I'll continue to say that. It will be interesting to do the same analysis for the financial services. So let's go there and open the Nifty financial services. Where am I missing out on something? FMCG, India consumption, IT, metal, PSU Pharma. What's wrong with me? I'm sorry, it was right on top. Nifty financial services. So if I sort it in terms of monthly, we've got India Bulls Housing Finance, ICICI General Insurance, looks good. Now, what I would be looking at are stocks which are holding well. These are my two moving averages, which I use, the 13 and 34. And my intention would be to look at those ones which are where 39 is above 34, or the stock has found support as a 34 exponential moving average. Indiabulls Housing Finance is significantly below that. It's down 78% over the year. Doesn't make sense just because it's cheap. I think you can trade, but not from an investment perspective. Look at ICICI General Insurance. I don't have much data because it had been a recent listing. Up 19% for the month, down 7% for 4 months, and up 20% for the year. In fact, let's do one thing. Let's sort this group in terms of yearly performances. HDFC Life, ICICI General Insurance, SBI Life. Do we have an ICICI Pru? Do we have some kind of a theme coming out here? Can we clearly see that it is the insurance companies, be it life or general, which are showing the kind of strength? Most of all of them are recent listings. They have been included in the markets recently, and they are showing the maximum strength. So a theme is coming out from this, that it's the insurance companies from the financial service sector which has shown the strength, and it's likely to continue. Amongst that, it seems like ICICI General Insurance is the one which is leading the way, not in terms of performance in a month, but I would say performance in the last 4 months. It's down only 7%. The others are down in the tune of 20 to 25%. So insurance companies. Then you look at Kotak Bank. Now, Kotak Bank is a stock which I talk about at length most of the time. It has bounced back exceptionally well, up close to 7 days on a row now. It will slow down definitely. But the idea is from the monthly perspective that even if it falls further, I think these are the stocks which can show some strength. So Kotak Bank, then we have HDFC, we have ICICI Bank, HDFC Bank. Now these are names you cannot hide from. HDFC Bank has the highest weightage, ICICI Bank also. So you have to keep an eye on them. They will fall with the market, and they will also help the market to bounce back. The others which you can stay away from, Indiabulls Housing Finance from an investment perspective, Edelweiss, M&M Finance, Axis Bank. Okay, this will be an interesting stock to talk about. The stock is up 18% for the month, all right, but it's down 41% for 4 months as well as a year. So the majority, if you can see, of the damage for Axis Bank has happened actually in just 1 month, which is the month of March. And it's done little well. It's bouncing back from the lows of its 2016. Remember, 2016 lows for the Nifty is sub 7K. Axis Bank is one stock which has broken below that 2016 low. I would say broken and then bounced back. So a stock you can trade in and out of it because it gives good swings, but it doesn't give me that kind of confidence. State Bank of India, if you look at, it's underperformed it as if I sort it in a 1 month period. It's very interesting. In a 1 month period, within the Nifty Financial Services, State Bank of India is the biggest underperforming stock. It's down 3% for 1 month, where all the sectors have posted positive. All the stocks in this universe has posted up for the month. State Bank of India is down 3%, down 42% for the month, for 4 months, and down 38% for a year. Now, this is a quality index heavyweight, which is, I can clearly see it is holding really well to its supports, the channel supports. If you allow me to draw here, it will essentially look something like this. There you go. It is at its channel border. Now, if financial services have to do well, if the banks have to find some support, the private sector banks are stretched on the upside, they will ease off, and the bank Nifty will also ease off. If the overall sector has to find some support, State Bank of India has to perform. It's at channel supports, it's at close to previous lows, it's the biggest underperforming stock, it's an index stock. So State Bank of India is something that you should look at rather than stocks like Edelweiss or Indiabulls Housing Finance. The other stocks, PFC is completely range bound, so it needs a breakout. I will not be talking about Chola Finance and PFC or Bajaj Finance. A stock which essentially is very good from a trading point of view. The investment story, it's an extremely strong uptrend, as we can see. If you break this down into the weekly charts, you can see that the stock has bounced back from very, very strong supports. And if you've been following my weekly YouTube videos, this is a falling wedge in a falling market, which has reversed on the upside. So I think the stock will try its best to bounce back further up, close to that 2,800, 2,700 mark. But it will take some time. But definitely a strong counter in your hands, which is up. It moved late in the month of April, which just finished. Bajaj Finance picked up late. So I would say Kotak Bank, ICICI Bank, HDFC Bank, State Bank of India, where we can take some risk, and the insurance companies. That is what is sticking out for the financial services. So I'll mark this for you again. We'll not be talking about real estate. It's not the best of the sectors to trade, to invest. You can trade in and out of it. I only track a bit of DLF. You can take a look at it. Oberoi is something which is relatively better from an investment perspective, but not the best of sectors. I generally don't put much effort looking or analyzing the real estate stocks. When I get a good trading opportunity, I trade in and out of it. So let's come to the bottom line of this video. Let me take this down here. Let me clean it up for you. Let me go to the data and sort this further and do it a yearly performance. Pharma, FMCG, and IT. I would say the top three sectors, of which Pharma and FMCG are playing the role of the defensive. IT is playing the role of something really interesting. I would say it is not a space which we can be defined as defensive. The market does not hide behind the IT, but it's showing good strength. So Pharma, FMCG, and IT. Financial services and banking is something that we cannot hide. Even if it's the biggest loser in the last 1 month, we cannot stop looking at it. Energy, predominantly Reliance Industries followed by BPCL. And the turnaround stories can come from these two. It's not that we have purposely taken all the gainers. In fact, we have taken two big sectors which have lost 30 and 40% in the last 1 year. Metal and auto can lead to a turnaround story going forward. There are other hot stocks like Larsen & Toubro that one should definitely keep a close watch on. But these are the 1, 2, 3, 6, 7 sectors on a monthly basis we would like to keep an eye. And we should not be extremely happy that the channel is holding and we've got a beautiful bounce back. I feel that the market can stretch itself further up. I've been talking about 9,800, 10K mark, but this move, which we saw yesterday on Thursday, was exceptional. I feel that the markets will definitely come down and it will try to find supports close to that 9,100, 9,200. In my recent YouTube video, I said that 9,250, what was the level? 9,250, yeah. It should hold 9,250. As long as it holds, it's better. In fact, I would extend this further and I'll say that it should hold 9,400 now. If 9,400 holds, 10K is definitely there and it can extend further up. If 9,400 is given away, then we slip back to another volatile range for the overall market. Nevertheless, if you want to keep a market watch on your software, on your platform, Pharma, FMCG, IT, financial service, energy, auto, and metal, keep these stocks on your list and observe where you can find good supports and trading opportunity from there. I am unbiased at this stage right now, cautiously bullish from the short-term point of view, because I feel in the last 2 days the bears have got trapped. But getting trapped is like a trending thing now. Gap ups and gap downs is extremely trending now. It means that it is a norm. So getting trapped is not a big deal. The bears have got trapped in the last 2 days. The bulls can get trapped in the next 2 days. Anything can happen in this kind of an environment. keep your trades in terms of time frame as limited as possible. If you trade the futures, then I would not recommend to keep a heavy position overnight. You don't know what's going to happen tomorrow morning. And try and stick to trading long positions in sectors which are showing strength and short in sectors which are showing weakness. Unbiased, 9,400 is the level for me on the Nifty, which should hold, below which I might turn this cautiously short-term bullish stance to cautiously bearish stance. As long as 9,400 holds, the possibility of a 10K is very much on the cards from the short-term Nifty charts. All right. Thank you for listening to me. I've taken a bit of your time. Do share your thoughts, suggestions, and feedback. And if you have observed something in any particular sector or stock, please comment on the box, and it will be really useful for me to take a look and share my thoughts on that. Till then, it's a new month, it's a new week, new day. On Monday, trade well and trade wise.